InterRent REIT is the owner and operator of rental properties, mostly in Ontario and Quebec, and it has agreed to be bought by an outfit called Carriage Properties. One of the purchasers here is a Singapore sovereign wealth fund, GIC. Now, one of the investors pushing for this was Anson Funds. They're an activist investor here. We're joined by Michael Missaghie. Missaghie, he is from Arch Corporation and Anson Funds. So you had been pushing for change at InterRent.
Yes, we've been engaging with the company over the last few months. I think from our perspective at Arch and Anson, what we like to do is look at companies from both a private and public perspective, and our focus is on real estate. And with InterRent in particular, what we saw was a company with a great operating platform, amazing assets, but we felt that there were issues within the business. Corporate governance, capital allocation, and that was all combined into a valuation that looked very attractive. REITs have been struggling. InterRent was included in that. It was probably trading at greater than a 30% discount to NAV when we got involved. So we felt the combination was very attractive from an investment standpoint.
Let's put up a 5-year chart for IIP.UN. Raymond James saying here that it's a premium, 29% to the 3-month trading average. However, it's a 5% discount to our net asset value estimate. And they're saying it's also, it looks like it's shy as well to the consensus, but certainly short of Raymond James's net asset value estimate.
Right. So I think, the way we're looking at the transaction is there's a few things that investors need to consider right now. First, this is a related party deal. So
because the CEO is involved here.
The former CEO.
Oh, I'm sorry,
now the
CEO.
executive chair.
Yeah.
And he's an owner in the business as well. But I think investors should be aware that this is a CLV-led deal. CLV, along with GIC, have made a bid to acquire the company.
And GIC is the Singapore fund.
GIC is the Singapore fund, right. So with a related party bid like this, a little bit more scrutiny is probably going to be involved. And goes back to your question on pricing. Right now, you're looking at this deal at around $13.55. This is well below their IFRS reported NAV of over $16 and below the analyst consensus NAVs of probably above or around $14. Mm-hmm. So when you add up all those things, you're really sitting there as an investor saying, is the board going to do its job right now and run a proper go-shop process? Get other interested parties to the table and make sure that value is maximized for shareholders.
Have you been in touch with the board? Have you had feedback on how they did this process?
I won't get into the private discussions we've had with the board. I'd say our interactions with them over the last few months have been constructive, and obviously they felt, along with Mike McGinn, the executive chair that was part of this bid, mm-hmm. that privatizing the company was the best path forward.
But you'd like to see more of an auction for InterRent?
We want to make sure that there's a strong, transparent process to ensure that value is maximized for shareholders in this deal, especially given that it's a related party transaction.
Now, we don't have InterRent here to respond, but having said that, just give us your main concern on governance at the REIT.
Well, I think the governance kind of discussions in the past will leave there. Our focus more is on the deal on the table. We're encouraged, obviously, that they've looked towards maximizing value. Mm-hmm. And we recognize that at the time, this was probably the best bid that they had on the table. We're hoping that was the case. Now, our view towards governance is making sure that this go-shop period that allows other investors to come and look at the company is run transparently in the best process possible to maximize value for shareholders, also recognizing the fact that the price is well below analysts and IFRS NAVs. Mm-hmm.
Raymond James puts the distribution payout ratio at only around, for this year, only around 72%. Is that low for a REIT of this kind?
I think it's a reasonable level. Again, going back to kind of our thesis on the business, we felt that from an operating standpoint, an asset standpoint, a capital structure, so your balance sheet and payout ratio, the company was attractive, especially at a 30-40% discount to NAV. And obviously, I think we got a lot of kind of naysayers or scrutiny around building our position when it became public, because REITs have been doing poorly over the last 36 months. But our view is that management teams and boards have sort of been hiding behind higher rates, higher inflation, believing that their shares are trading below NAV, when the reality is that you can't sit on your hands forever. You've got to be able to move forward. And that's where we were trying to help InterRent and hopefully the sector going forward in a tough environment from a macro perspective.
Right. And so the Raymond James, for example, is saying that this takeout is about 5% below our NAV estimate. In a deal of this kind, would you be always looking for a premium to NAV?
I mean, historically, that's what you've seen in the REIT space. If we look at some of the deals that happened during different macro periods, there were premiums to NAV, and especially because you're getting an operating platform along with the assets here, right? So that should be valuable to an acquirer. And I will say, it is encouraging seeing GIC step in to the Canadian market.
Yeah.
This is a big deal, and they've obviously seen the assets and the outlook and feel it's a good time to allocate capital here. So for many people that were saying, there will never be a bidder, nobody's going to come and look at this company, I think we've proven them wrong.
Sophisticated player. I guess they know about apartments in Singapore. It's one of the most densely populated places.
Absolutely, they do.
What about other REITs, Canadian Apartment Property, CAR.UN or Boardwalk? Do you think they're trading at discounts? I
think they continue to trade at discounts to NAV. The analyst community and investor community will point to a number of factors for that. But I think what we always search for in the REIT space and private real estate space is what really is NAV. And NAV has got to come down to what people are willing to pay for assets in that period of time. So when we're looking forward, our view is that, yes, we're trading at a material discount to NAV in many cases. We think there can be deals in the multi-residential space, in the retail space. There are likely to be more M&A opportunities going forward in the Canadian REIT space.
That's interesting. And I wonder, will other companies go to market, go public with apartment REITs? Is the environment not really favorable to do that?
I don't see that happening. It's unlikely we're going to see a lot of IPOs going forward. I view what's happening with InterRent and hopefully with some of the other REITs in more of a market clearing process. Again, I'll go back. For the last 36 months, REITs and REIT investors have gone through a period they haven't seen for the last 15 years. From about 08-09 to 21-22, you were in a pretty low rate environment.
Yes.
So anytime rates went up, you just sit on your hands and say, hey, I'll wait for rates to go down again. Then my NAV will be back to what it should be.
And that's what some management teams and boards were tempted to do?
Well, I think that's what we've been hearing in our investor meetings for the last 3 years. And we said, well, what's your strategy outside of macro? And I think that this transaction, hopefully along with others, will give boards and management team more confidence that they don't need to stay public and be locked out of the equity and debt capital markets. They can actually do transactions that can be beneficial for the company long term, that don't necessarily mean staying public forever.
Yeah. Thank you very much, Michael.
Thanks for having me.
Michael Missaghie is president of Arch Corporation and portfolio manager at Anson Funds.